Hey, this is Trading with Big G or Gene or Gino or Dad or however you know me. And this is lesson number 14. We're going to talk about trading breakouts. And this kind of relates to lesson 7, where we talked about support and resistance. And we'll review support and resistance in this lesson as well, because it's really all about trading breakouts is all about watching support and resistance and watching the price of a stock break through or break out of support and resistance. So what you're looking at here is a chart of the SP 500, the SPY. But let me show you something else first that I've got for you. This is basically how to trade breakouts, or what a breakout is. You've got, this is the stock price here. You've got a support base down here. You've got, this is a resistance line here. You see where the price hit resistance, went back down, back up, hit resistance, back down. And then in this case, it broke through, or broke out, what they call a breakout. It broke out above the resistance and came up and made a new high. And after it made the new high, it came back down. This is called a pullback. It pulled back to the old resistance, and then it bounced off of that old resistance, which became support, and then back up in a breakout above that most recent high. So really, in this case, if you were trading this stock, you could have purchased it here at the breakout, right there. You could have waited for it to pull back, and you could have gotten it right there. Or you'd have even a third opportunity, and when it broke out up here, another chance. So watching support and resistance, and watching for the price to break out above the most recent resistance. This is a strategy that some traders, this is all they do. They watch for breakouts, and it works in all time frames. And it's another good strategy or way to watch the market and make a little money from it. So let me get this off the screen, and come on, here we go. So let's just talk about and look at this this chart and a few others. I'm going to try to make this video faster than the other ones. So here's the S&P 500. Today is March the 6th, I believe it is, or 5th, 6th. This chart shows through the 5th, which was Monday. And if you look, we have some breakouts. You see where the S&P, this is back in July, August, where it hit resistance right around here, and it broke out right here. It pulled back a little bit, just about to that same level, and then it broke out here. So there's initial breakout, there's your pullback, and there's your secondary breakout right up here. So it goes up, it goes up, it goes up, it kind of hits a little resistance there, pulls back, it breaks out here, goes up to a new high, pulls back, doesn't pull all the way back to this new support and old resistance, but it pulls back some. Sometimes pullbacks are only about halfway, and this is a good example of a pullback, a healthy pullback, they would say. When you get a new high, pulls back about halfway between here and here, and then it takes off again, breaks out to a new high right here, kind of consolidates and waits, breaks out here, and there you go. So, and all this is a nice smooth run over the past months. This is going back to June and July of 17. Of course, this is now March, and in February of this year, 2018, it got really crazy with this correction. So you can see all the busyness and the big candles, and it's been a little bit crazy over the past month. But this is a good illustration of a breakout. Let's look at another chart real quick. Or actually, while I'm on the S&P, I want to show you yesterday's 5-minute chart. In yesterday's 5-minute chart, we had a good example. We had, this is the beginning of the day right here is 9:30 on March the 5th. That was Monday. This is Friday, all that. So yesterday the market opened. After the first hour, notice it made that low. Right here, it made this high. Had this box that it developed in the first hour of trading. And then it broke out right here, pulled back real quick, and then it took off. A little pullback, took off. So there, right here was a breakout after the first hour of trading in the S&P in a 5-minute chart. Some people use that strategy. Day traders will do that. I don't recommend you do that yet, but just wanted to show you that while we were on the S&P chart. One more, and I'm going to make this, like I said, make this video maybe a little bit faster than the other ones. This is American Express, and you see some opportunities here to watch for a breakout. You see right here, we had, it kept hitting resistance, broke out. Uh-oh, you know what? I knew that looked funny. This is the 5-minute chart. Let me change that. My bad. I knew it didn't look like it did earlier. All right, that's better. American Express, this is back to the daily chart. I was still on the 5-minute chart from the previous time. So let's get that out. Now, that's more like it. You see where we had resistance here? It broke out briefly, but it pulled back. This would, some people call that a fake breakout. It broke out, but it kind of faked them out. Went back down. But then here, at new resistance here, you had a breakout here. It pulls back. And so that new resistance or old resistance becomes new support. And then it breaks out again here. And off you go. So you could have bought here. You could have bought here at the pullback. You could have bought here at the secondary breakout. So as you start looking at charts, you can start watching how these breakouts occur, and just watch for breakouts to new highs or recent highs. It doesn't have to be an all-time high, but it would break out to a recent high. So anyway, that's trading breakouts, and then there's breakdowns, and a breakdown would be just the opposite. It would be a bearish strategy where it would, instead of going breaking up to a new high, a breakdown would be obviously going down. But anyway, that's trading breakouts. Hope you learned a little something, and we'll see you next time.